Welcome back to another week in review. We're going to be going over January 27th, the week of. Just a quick note about this week and some housekeeping, I suppose. We have the beginning of the Mag 7 earnings this week, as well as the FOMC rate decision that happens on Wednesday, which is also the same day as Tesla, Meta, Microsoft, IBM earnings. So as far as this week goes, it's going to be very headline driven, in my opinion. I don't carry a lot of bias going into this week because of that. I will say the last couple of weeks, if you've watched these videos, and if you have, thank you, first of all. But if you've watched these videos the last few weeks, you'll have noted that I've been bullish from the lows, basically going up into these highs. My position hasn't really changed as far as long exposure goes. I'm fairly pared down. I'm basically 70% cash at this point in time from like an intraday perspective. My longer term accounts are fully vested on longer time horizons. But as far as where I think we go in the short term, I think this week is largely going to be pivotal and going to break us away from this range, one direction or the other. And it's going to be largely headline driven with the rate decision as well as these earnings that come out. Less so the rate decision, more so I think revisions and what happens with the dot plot, like what we saw last time. So last time the rate decision, basically it's essentially completely priced in by the market right now that there's going to be no change in the federal funds rate. That's not what I'd be watching. I would be watching how the revisions to the dot plot, so the carry forward of projections for rate cuts, I would be watching how that's affected, and if we see a large change in the majority of additional cuts, or however it works out, more cuts, less cuts, doesn't really matter. But I would watch how that changes, and that will change the dynamic of this market, along with obviously all of these earnings. So the expectations of what the federal funds rate is going to do based on those revisions, as well as the earnings that are going to come out, that's what I'd focus on. The rate decision itself is kind of unless there's some surprise, unless they come with a cut, or unless they come with a hike, which again, very unlikely. The market hasn't priced any of that in. Market's usually not very far off on these things, so that's just how I would look at it. So I think Wednesday is going to be the big day as far as what's really going to matter this week and going forward, likely. But I just wanted to get that out of the way to say, as far as like a bias of up or down this week, I don't really have one. I really want to see how this week pans out. My long exposure is very much pared down as far as intraday and short-term trading goes. And we'll have to see kind of how this breaks away. So we'll start with that. Just to give a quick synopsis of last week, extremely volatile to begin with, which kind of to be expected. So we had short trading week last week with Martin Luther King Day. On Monday, the market was closed, and that was also the inauguration of Donald Trump, as everybody knows. So we started off last week with a very volatile Globex session, to say the least. And then we actually opened Monday. We opened Monday right at the prior weekly highs, essentially. Spiked down and held, and then we actually started a trend week on a short week on ES and set the high on. So we set the low on Tuesday, which was the first official trading day. We set the high on Friday. So again, we had another trend week. We had a really nice strong breakaway from the prior weekly highs. So basically, we opened around or above 6,050s. We spiked it, and then we had nothing but bid pretty much the rest of the week. Intraday, very tricky the last couple of days. The last couple of days were quite hard from a trading perspective, for me at least. The tape was very muddy. I took a couple stops on Friday trying to trade the NASDAQ, and then ultimately I basically just walked away. It was very tricky. It was a very tricky day on Friday. But as far as the expected outcome of last week, it was essentially what I was looking for. I was looking for that continuation and drives from the lows. Ever since basically we've been down into these lows, down into the mid 5900s, 5800s area. I've been looking for this market to continue to go higher. We have done that. We've put in new all-time highs. So we basically completed the rotation to the highs at this point. We've cleaned up those prior all-time highs. So now coming into this week, again, objectively neutral. So the big things I'm looking for this week on the S&P is basically, first of all, Probably not going to take many trades until we get some of this data out of the way. I do think we're going to be fairly range bound probably until Wednesday, until we have the FOMC decision, and until we have those larger earnings out of the way. And then also remember, we have Apple and Intel and Visa on Thursday after hours as well. So Wednesday, Thursday is going to be really important. So I think we're going to be fairly range bound. I wouldn't be surprised to basically see us fill in the upper distribution from last week. So basically range bound in between, 6150s to potentially down into the top of the gap at 6110s. As far as what I'm looking for, again, I look at this essentially as, from an intraday perspective where things are potentially going to set up. I'd like to continue to be a buyer as long as we're trying to frame the daily higher. So as long as we're, above this RTH gap, I'm going to use my line in the sand for buyers this week early as the top of this RTH gap down into 6111s. So basically, if we're holding 6111s, potentially eat into this ETH low that we put in down into 6100s. If we're finding a decent bid in here, then obviously, I'm going to be looking for the rotation back up into last week's POC and ultimately clean up the upper structure of this distribution up here, up into 6150s and then the highs in 6160s. If we have an immediate strength in this, as far as Globex Open, as far as Monday goes, immediate strength to me would be bids above, 6130s. So if we find buyers really early, if we see a strong move away from 6130s, then I think that would signal to me early on that we're probably going to we're probably going to come back up and correct the top of this range and fill this out. So I'll look for the move to 6160s. The upper expected move this week is essentially 6,200 exactly on ES. So the IV is quite elevated this week, as you'd expect, with obviously the rate decision and earnings. If we start accepting above 6160s, whether it's early in the week or, in my opinion, more likely later in the week after Wednesday, after we start getting that data out of the way, then the upper range I'll look for is that 6,200 area basically to end the week. And again, extremely data dependent, because the other side of the equation is we have something come out on the dot plot. We have, earnings misses. I don't know how it's going to play out. But if we see aggressive selling, or if we see a reason to sell this, then I think that's going to start from, a failure to bid 6110s. So that would basically start in this low volume area on this RTH gap. If we start offering below 6110s, then I'd look as low as 6082s, basically down into the bottom part of last week's distribution, and more likely, in my opinion, back down to essentially correct this range down in here, down into the lower expected move of 6065s. So I realize that's kind of wishy-washy, but again, you have to be open to either side of the trade when we have this much data and we have such impactful things coming out. We have binary results coming out. So the last couple of weeks, very bullish for me as far as the way I leaned. This week is objectively neutral, and I'm just going to have to basically play these ranges as these form. So that's the S&P. The NASDAQ will go through quickly as well. The NASDAQ was interesting last week, so we are in a 3-day balance range right now. So again, you're going to want to stick to the extremes of balance to give you the best opportunities. This is an absolute fucking mess in here. So we saw just a jumble on the order flow side as far as what was actually happening in here. This is where I got caught. So initially I was buying 960s, I think, or 950s. I'd have to go back and look, but I had I had some points, but then I got break evened on one of the trades, and then I got stopped out on the next trade when we eventually broke through IBL. We broke through the initial balance lows, and we came down and tested this area down in here. So Friday was kind of a shit day for me. I wasn't red, but I made virtually no money. I had way too much mental stress for making absolutely no money that day, which is, not ideal. But at least it didn't blow up, so that's good. So what I'd be looking for here, at least on the order flow side, this was extremely active down here. So this was similar. I don't want to say it was exactly the same as what happened and what I talked about in the prior videos of down here. So I called this low very well. Very accurately, which I think was, at least for what I was looking for, it was a very good call. I basically positioned long and got a good chunk of this move back up to the highs. And the prior video, at least prior couple of videos, I talk about what happened here. Similar down here, not quite the same, but what I'll say is that the way this looked, 880s down into 840s. The way this looked to me was very similar to what happened at 720s. So we had a very, very deep vid. We had extremely aggressive selling, sellers with size, with 400 or 500 lots, 400 or 500 lot sells on multiple occasions. Couldn't break through the passive buyers sitting down into this low. So we had a heavy amount of absorption that happened down into this low. And we came back down on Friday, tested it, and ultimately closed above. So there's two outcomes really, in my opinion, on this. And again, like, we can just keep this simple. This is a 3-day balance range. You essentially want to play around the extremes. Because of how this low looked to me, I'm more inclined, at least early on, to say that it could hold. And if it doesn't hold, I think it's going to lead to a fairly large liquidation, or it could lead to a fairly large liquidation as this, as all of this passive buying unwinds a lot lower. So this balance range here, if we start, I'm going to look at this as, the line in the sand for me for buyers is going to be these lows. So 21,880s down into 21,840s. If we start offering below this, then I think the likelihood of us coming down into 700s is definitely there. But I think more likely what I'd be looking for is a move back down into the lower range of the inauguration day range. So probably back down into 21,500s. The expected move on Qs it's priced in is actually 21,550s, around 21,550s, which is almost the exact low of the inauguration day range, and also lines up with the 20-day SMA. So just to kind of keep that simple, like I think if these lows go, I think this balance range breaks and pukes pretty aggressively, or has the potential to break and puke pretty aggressively. I would be aware of responsive buying probably around mid 700s down into this upper distribution up here from the inauguration day. This is really going to be it for me. Like, this early on is going to be the line in the sand for buyers, but I think this ultimately, like holding the upper distribution of the day Trump was elected or the inauguration took place, I think this is ultimately going to be like the Alamo. So if there's going to be any type of defense on, a puke down, it's got to happen here. And if it doesn't happen here, then I think this is going to be a very large move down into 21,500s at least, and probably lower would be my guess. So, and again, I don't really think that's going to happen until Wednesday is out of the way. If it does happen at all, I don't think it's going to happen until Wednesday is out of the way. So something to keep in mind. Looking at this again, like play this as a balance range. You can lean on this low. I know the order flow down here last week was heavy. If we see, early stabs down and it continues to bid, then I'll just look for the rotation back up to weekly balance, or the daily balance highs, pardon me, up into 2290s, and then the breakaway from this range targets about 22,300, which is also the top range of the expected move. So again, really trying to keep this fluid this week. I'm trying to be fairly neutral. Order flow aside that happened last week into these lows. I mean, we have binary events coming out, so it's best to be neutral. It's best to wait for these areas to be tested, to see how they respond, and play the extremes of these ranges as opposed to getting caught in the middle of this, which I really want to avoid, because I got caught in the middle of this on Friday and it sucked, and I'd rather avoid that. So a bit of a longer video. I hope this stuff helps. I hope at least the idea of having, a neutrality going into this week, I think is really important. I don't think people should be too married to one side or the other, especially with so much data coming out. And again, I think the primary thing you want to watch on Wednesday, other than the earnings, obviously, is how the future revisions on the dot plot look, because that's what moved us last time. And I think that's ultimately what's going to move us this time, going into the earnings that we have in the after hours, as well as the earnings that we have on Thursday with Apple and Intel. So hopefully this helps. If it helps, please comment, like, if you want to subscribe, that would be great. Do all that shit that YouTubers do. Appreciate watching. Thanks.